all-share index a little bit down yesterday. The resources, industrials, not great figures coming out of there, but the rand continues to get a little bit stronger in terms of its recent weakness.
Yeah, we were off the worst levels for the day towards the close. In fact, gained a lot of momentum, and it almost looked as if the market was going to close in the green. That was largely off quite a powerful US market open, and again, it's a reminder of who leads these markets globally, because for much of the day, our time zone, Europe, the UK, and as we sort of drifted around, the US Open futures popped, and we kind of revved off. And I guess the rand ties back into foreigners buying equities in the local market. So when you often see the rand move in lockstep with our local equities market as people take on a little bit more risk.
All right, so we've been talking about currency. Let's talk about commodities. They're also doing particularly well all across, with the exception of platinum, down 0.7%. But oil is up, gold is up. And with oil, of course, we're moving into the northern hemisphere's autumn and winter, so we're expecting demand to rise in the next few weeks. How's that going to influence the price?
Yeah, I think in the short term, the supply side is pretty much all right. They're expecting at OPEC's next meeting for the group to do possibly nothing, perhaps review, and was interesting reading into Marius Klopper's comments yesterday, because remember that they're one of the biggest suppliers of commodities across the planet.
BHP.
BHP Billiton, correct. And they made the comment that they thought China's destocking had finished. So what they'd done was, with all those stimulus package, they'd created enormous internal demand and just been pushing it quite hard, and he expects to return to some sort of normal levels. But the most interesting part is that he said in the developed markets, he was starting to see a normalization in terms of their consumption patterns too, indicating that almost at a perfect time, when the likes of the stimulus package in China is coming offline, the developed world, i.e. North America and Europe, are starting to see a little bit more demand there.
All right, talking about Marius Kloppers, let's talk about corporate news. BHP results better than what the market had expected, given the downward spiral in commodities prices in the recent past. Why is that?
Yes, again, he separated their financial year, which was a year of extreme halves, because the first half last year saw an oil price at the beginning of $147 a barrel and $35 at the end of the first half. And then it's doubled from 35 to 70 in the second half, ditto the copper price. So I think what he's trying to point out is that the kind of the end of the world trade, the Armageddon trade, that's gone. And there's been renewed demand, and quicker than anticipated, in the likes of India, China, which he's very excited about, and he always talks about, and he's quite animated about the GDP per consumption per unit.
So basically, their forecast is that Asia will be the catalyst for global recovery, and you're beginning to see that in China in terms of internal demand reviving desire for commodities to fuel construction and other development programs.
Absolutely, and I think that infrastructure story is intact no matter where you are in the world. These big stimulus packages, regardless whether you're in South America, Brazil, or whether you're in India, these infrastructure projects are going to drive commodities short term, but it's more a long-term urbanization story for me, and that's why you should be in a commodities play, because there's still a number of billion people that need to be urbanized.
Okay, still staying in the commodities space, seems to be what Anglo American is gunning for. They sold off Tongaat, but you know, it made headlines yesterday by way of corporate news, but it's not such a major asset for Anglo Tongaat.
I think, not so sweet anymore. Look, I think what they're looking to do is obviously raise money outside of their core business. And, you know, there are many strange assets inside of the Anglo stable that they've wound down over the last decade. And it's more a function of the past, where they had nowhere to go. They had to invest in local assets. So it's getting out of the non-core, non-mining assets at a slightly more favorable price. The Ilovo shareholders would have sensed a bit of an overhang, because I guess there would be a discount in the book build exercise. But it's a fair whack of the company.
Okay, continuing this on this particular attack. Okay, so Anglo sold off its 1% ownership of a sugar producer. They've also sold off Anglo Gold Ashanti, which has had people question what the strategy is going forward in the midst of this possible revision within the commodities market. De Beers is in a bit of distress, but they still consider that a core business. So what do you think they're aiming at here?
Look, their flagship business undoubtedly is their platinum interest. They own 3/4 of Anglo Plats. And I think in the short term, people are going to want to see where the strategy is at. So perhaps they're raising money on this side to be able to throw the sandbags on the other side. That's the sense I get. They seem to, for the time being, have thwarted Xstrata's, and I think in part due to Xstrata's perhaps worse results. Xstrata didn't have a sparkling set of results either. So I think everyone in the commodity space is really sucking wind right now. And I think Anglo's strategy has been over this last decade to sell off assets that are non-core and focus on the stuff that can take them forward over the next decade. And I don't know, I've never quite liked the diamonds business because I can't quite understand it and put a proper valuation on it long term. But I buy the luxury goods side story globally.
All right, results out today will be Standard Bank. We'll have to wait and see. But many experts concerned that the results will really reflect what's happened with the losses at Liberty, over 1 billion rands.
Yeah, and I think again you've got to have a look at loans siring across the book. It doesn't matter where you are, and that's pretty much been the pattern. So it's almost the market will be probably saying, "Tell me something I don't know," rather than tell me what I already know. Because a fantastic run up from the lows in March to these types of levels looked like the Standard Bank share price was going to crack 100.
Right.
That's not the case. It's kind of fallen away a little bit as financials have run out of steam.
But isn't Standard Bank one of the better performing banks? Their deal with ICBC of China, moving into frontier markets in East Africa, going into Russia, Argentina.
Yeah, look, they're pretty much geographically diversified in terms of the other banks. And I think where they want to place themselves over the coming decade or so is a serious emerging market player. And that's why they've entered into South America. That's why they're in Russia. That's why they're going to make a push to go towards probably not the Far East, but perhaps somewhere Middle East, closer to India. And I think the type with ICBC is fascinating because what it tells me is that the Chinese are committed to Africa long term, and they're looking for a strategic financial partner. I think Standard Bank is in. And the other four probably wouldn't like me saying this, in a quality of their own. And I think, outside of our core holdings of African Bank, we do buy Standard Bank at the fringes.
Okay, and finally, MPC today, many calling for a 50 basis point cut, many saying it's unlikely to happen. The unions say they want it as big as 200 basis points. That's the least Tito Mboweni could do before he leaves.
I'm not quite sure where their high school economics fits into all of this, but that's being a little bit rude. I think, the consumer is still under enormous stress. Retail sales are poor, but inflation has still remained outside of the band. So if your next inflation read is much better than anticipated, then ironically there might be case for Jill Marcus towards the beginning of her tenure to almost be like one and done, almost the same as Bernanke was on the other side, where he raised rates for the first time and then waited forever and a day before he started cutting.
Right.
So I think her first job would obviously to be data watchers like the rest of us, and then just make a decision short term whether or not another 50 basis points would stimulate matters enough, because we've seen figures this week and again they look woeful. Manufacturing looks really poor. Retail sales also not looking that great.
Electricity hikes also that must be factored in going forward.
Absolutely, and I think inflation targeting should still be open for debate, but I think it's probably the most important policy that was implemented inside of the Mbeki area.
So you keep on referring to Jill Marcus, so that basically means that you don't expect Tito Mboweni to do anything today. It will be in the hands of Jill Marcus in November.
I think she's got to watch a couple more key data points.